The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
Good morning, everyone. It's Mitch Goldberg. You're listening to Money in the Morning with Mitch Goldberg on LI News Radio. This is a live presentation, 103.9 FM. We all here thank you so much for joining us. We've got a couple of things to cover. So, first thing first, the stock market today, March 1st, first trading day of the new month. We say good riddance to February. Let's see, Dow is down 4.2%, S&P 500 down 2.6%, and NASDAQ down 1.1% for the month of February. The Dow is the only one of those three that is actually down on the year. The S&P is not far from that, and the NASDAQ is still up probably about 7-8% at the moment. I didn't check the latest figure, but let's say it's up about 8% on the year. We see the Dow futures, which were up when I woke up this morning, about 5:30. They were up. Dow futures are down 75. S&P looks to be down 10.5 points, and NASDAQ futures down 24 points. These are all between, 0.2 to 0.26%, relatively minor in nature, and we'll see. This by no means tells you what the market's going to do for the day, but if I was speaking with you at, let's say, 1 o'clock in the afternoon doing this show, I would give you a quick update of where the market was at that moment. So the best we could do pre-market is the pre-market update. Oil, which we'll take a look at. Oil West Texas Intermediate is $76, down 42 cents. Brent crude is 83. So there's about a $5, $6 spread between the two. Brent costs more money than West Texas, because we get West Texas domestically. We get it from shale, from conventional drilling, from the Gulf of Mexico, offshore, California. We have it here. So our oil, as a result, we pay less for it. Believe me, the whole world would love to get their hands on our oil, and just, having this oil is and natural gas, some of the things that we are very blessed to have in this country. Natural gas is $2.71 per 1,000 cubic feet. That is half of what it was just a few months ago. So, we have some bumps in the road, but nevertheless, oil is basically trading in the middle of its range of the low 70s to the low 80s. We have a couple of other things. You have to take a look at how the markets did yesterday. So yesterday, the Dow was down 232 points. NASDAQ was down 11 points. S&P futures down 12 points. These are all fractions of a percent. 200 points in the Dow, which is 32,600. It's not like it used to be. It used to be, wow, the Dow's down 300 points. Wow, that's a lot. Today, not so much, just because we're working on such a bigger number. I do think it's better to quote these averages in percentages. So better to say the Dow is down 0.71%. But gold is not having a great year, but it's up $7 this morning. The ounce, $1,844. These are real-time quotes, by the way. And then the second to last thing we'll take a look at is the VIX. The VIX is at 20.8. The VIX usually shoots up in times of major stress in the stock market, but it's been hanging in there between 18 and 22, just so calm, cool as a cucumber. And it tells you that, yes, the market has been drifting down, but it's not doing it in a panic driven wholesale dump every stock you have way. So it's been pretty orderly, and it tells you that the, large investors are just constantly positioning, repositioning, protecting a little bit against downside, things like that. We'll talk about protecting against downside and my view of whether if that's even useful or not. And then the last thing we have to get into, the most important thing, are interest rates. The 10-year yield, and that is the benchmark yield. We go by the 10-year yield when we talk about interest rates in this country. It's 3.955%, getting ever so close to 4%. I hope it gets to 4. Okay, let me say, it would be cool if it stays here under 4%. But a couple of days ago, I said to you, if it doesn't hit 4% soon, I'm going to eat my hat. So I don't want to eat my hat. Okay. We still have a little bit over 5%. We're at a 5.14% on the 6-month T-bill, a little over 5% on the 1-year T-bill, and even going at 3 months, you're getting 4.8%. But a lot of money markets are paying 4% plus now. So you would do well if you have your emergency fund, and it's obviously you're not using your emergency fund for anything planned. That's why it's an emergency fund. You would do well to make sure that's in at least some kind of high yield interest account or something, because why not? Why not earn the extra money on the account? If you're just leaving it in your checking account at one of the big banks and you're still earning nothing on it, and it's your emergency fund, why not move it somewhere else? Also, a good thing about moving your emergency fund to another bank or another account is because you're less likely to look at it. You're less likely to use it for something that's not an emergency. And then always, you don't want to use it for a luxury. You want to use it for just emergencies. And by the way, I said this, and some people raised their eyebrows and commented. I said I hate the word saving for a rainy day. I hate that phrase. Emergency fund is for a rainy day. Savings are for planned expenses. I want to take my family on a vacation. It's going to cost me $10,000. What do we do now to save a little bit of that money over the next X amount of months or year or whatever to reach that level? That's savings. You're saving up for that trip, as opposed to just doing nothing and expecting to pay for it out of your current earnings. Now, if you have the income and you're making so much current earnings that you don't have to worry about it, good for you, and that's also terrific. But for most of us, we like to plan for these large expenses by putting the money aside. That is not an emergency fund. Emergency fund is for unplanned expenses. Okay, so let me get off that high horse here. Mortgage demand plunges down to like a 28-year low. All it takes is a slight uptick in interest rates for all it takes is a slight uptake in mortgage rates for mortgage demand to drop. The 30-year mortgage is tied to the 10-year Treasury, which we just went over, is 3.95. Now it's 3.957%. It was 3.955 a second ago. So mortgage rates are rising. As soon as it happens, it hurts demand. I am looking very closely at the housing market on Long Island. And I go into Zillow, Realtor.com, and I look, and I'm just surprised at what I see is somewhat of still a lack of homes coming onto the market. Today's March 1st, the beginning of the selling season. And, if people aren't listing their houses by, let's say, the middle of this month, that's pretty much it. What you see now is what you're going to get. So still not a lot of inventory coming. Granted, you have an awful lot of people who bought houses with very low rates. Their houses are off the market for, over a decade. Well, why would you ever sell your house if you've got a 2 or 3 or, a sub 4% mortgage, and then you're going to buy a new house, presumably bigger, more expensive, and pay almost 7% for a mortgage? And, for a lot of people who discover this when they hit about 60-ish, they decide we should look at downsizing. Your downsizing does not mean, less expensive on Long Island. Downsizing just means you're going from a house to, a condo development with, more amenities, but you're not, as far as the expense goes, these are very expensive. We will have to solve these problems one day, so it's going to have to solve itself if it ever does. Okay, so a couple more things to go over, and I am going to get into the personal finance aspect of this stuff too. A few more things to talk about in the market. You're listening to LI News Radio, 103.9 FM, Money in the Morning with Mitch Goldberg. We so greatly appreciate your sticking with us. Stick around. We've got some really good stuff coming to you in about a minute and 45 seconds. So stay tuned. We'll be right back. Welcome back. We begin the day with the market futures lower, continuing the downtrend from February. Dow futures down 76, S&P down 13, NASDAQ futures down 35. You cannot invest directly into an index, by the way, but you could invest in a security that tracks or mimics an index. Oil is off a couple of pennies per barrel, nothing major. So we will have to get into some really important things here. Bond yields, we're basically all watching the 10-year yield. It's at 3.955%, and we're all looking to see if it could hit 4% or not. It did a few, like a month and a half ago, 2 months ago. It was 4%, so it wouldn't be unheard of. We've been talking about artificial intelligence a lot. Chat GPT and IA, you've been seeing a lot of this battle heating up between Google, which is Alphabet. Okay, I always say that, but if you didn't know by now, Google changed its name to Alphabet, whereas Alphabet is the company now that owns Google and YouTube and all those other things that Alphabet has. So Alphabet and Microsoft are in this just very heated battle for artificial intelligence. It has to do with search, because it's believed that with Microsoft's recent entrance into artificial intelligence, that they could actually possibly take away a big chunk of search business from Google. Now, Google has, for search engines, Google has about 90% of the market for search. Microsoft has maybe 5%, maybe 7%. So Microsoft has a lot to gain, and Google has a lot to lose. And Microsoft is just such a well-funded company that is really aggressively investing in new technology. So there's the battle there. But there's more to it. NVIDIA is known as NVIDIA and Taiwan Semiconductor. All right, NVIDIA is known as the company that creates the chips that go into the cloud server centers that help manage, navigate, and effectively use machine learning software. So when you want to do artificial intelligence, it's cool that you could do something on your own computer, or maybe you use like a marketing service or something that uses AI. But if you really want to get into AI, you've got to go onto like the Microsoft cloud or the, Amazon Web Services cloud or the Google cloud. And they provide all of that stuff. Okay. And, from what I understand, an NVIDIA chip for AI costs $10,000 plus. This is not the chip that goes into your gaming PC, which, by the way, NVIDIA chips for gaming PCs is a big business for them, and those are the greatest chips. My son built his own computer. He's 17, and he has an NVIDIA chip in his computer, so it's really cool. But then you've got Facebook entering into this, Apple, Adobe, so many others. So Bank of America picks their AI picks. And what you and I have been talking about on the show is that there's going to be a lot of smaller companies that you've never heard of coming out of the woodwork. There's going to be a lot of products, exchange traded funds or unit investment trusts. These are basically packaged products, packages of stocks, which say, we'll give you like 20 or 30 AI or AI related stocks and you'll diversify in the sector. Now, diversification is a strategy we use to minimize or to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market, if you didn't know. But my thing here is stick to the big ones. I think that this is going to be another stretch of stocks that people get carried away with, like the pandemic stocks, the meme stocks, the pot stocks, internet stocks of the year 2000. But the real ones who are going to develop this technology, what I've been saying, are the big ones. The stocks that we talk about all the time, which is Alphabet, Meta, which is Facebook. If you didn't know, Facebook changed its name to Meta, so we say Meta. Nvidia, Apple, the Adobe, the big companies that you already know of. Netflix is pretty big in using artificial intelligence too, by the way. So my sense is beware of these the more aggressive names in the space. You have more upside potential over the near term, but when the investor enthusiasm goes away, the second tier and third tier stocks are the ones that got a lot of press, but they're the ones that, in my experience, go down the most. I just want you to be careful and make sure that if you're going to bet specifically for AI, that you go with companies that you know. A branch manager of mine many, many years ago, when my career was knee-high to a grasshopper, he once said to me, Mitch, whenever you recommend a stock, an individual stock to a client, you better make sure that who's ever not making the decision, or if it's the husband making the decision or the wife making the decision to buy the stock, you better make sure that the spouse has heard of the name. And what he meant by that is stick with names more, household names that have been around a long time. You might not make as much, but these stocks continue to be around to this day. Whereas I can't even remember all the stocks that have basically gone to kaput. Okay. So just some advice I want to pass along. This is not specific investment advice of any security. I just want to share with my wisdom with you. Okay. That I see. Not everybody is cut out for individual stocks. I don't like to make individual stock recommendations on the show because I really feel like I have to know the person in front of me before I make like a really specific recommendation. So consider all of the financial advice I give to you here as general advice, which often needs to be tweaked to make it more personal to you. And while we're on that, if you want to take this conversation to a one-on-one, check me out at moneyinthemorning.info. Again, that's moneyinthemorning.info. It's not .com, it's .info. And the name of my firm is Client First Strategy. You can check out clientfirststrategy.com. Okay. So a couple of market movers to look at. We'll go with the feel-good story first. That is Eli Lilly. They have decided to just, no matter what, your drug, your insulin is $35 a month for all those with private insurance, private health insurance. And if you don't have insurance, you just have to contact the company. They give you a discount card and you get it for $35 a month. So Lilly is the biggest manufacturer of insulin, diabetes drugs. So that is a definitely long overdue. I think it's very politically expedient of them, but it is good for consumers. And considering there are so many Americans taking insulin, we could practically consider it our own little healthcare stimulus plan, maybe. Okay. Lilly also has a drug coming out. They have it now, Mounjaro. They have a drug approved for weight loss. There's a couple of these drugs. There's Wegovy as well. There's another one, but there are these, I don't know if you've heard about these, but these injectable drugs, they're all over the place. Like so many people are taking them. They're made for diabetes, basically what they do is they stop you from being hungry. Like you start eating your meal and you're full, like really fast, like full and satisfied really fast. But the Eli Lilly one, not only does it do that, it works on another hormone receptor that helps your body break down sugar and fat. So it's considered a home run, if approved, for weight loss. So it just really tremendous things. My concern is that I know people have been on these drugs who got off of them and they've already gained the weight back. So I don't know what the long-term effects are, but that remains to be discovered. So much to talk about. You're listening to LI News Radio 103.9 FM. I hope you get a lot out of the show and food for thought. And Money in the Morning with Mitch Goldberg. You can check us out, moneyinthemorning.info, and reach out if you want to have a one-on-one. Thank you again for tuning in. We greatly appreciate your time, and I would love to hear from you. I would love to know what you're interested in talking about on the show, and that would make it better for everybody. Have a great day, and I can't wait to speak with you tomorrow.
Securities and investment advisory services are offered through Next Financial Group Incorporated, member FINRA SIPC. Client First Strategy is not an affiliate of Next Financial Group Incorporated. All the views expressed are those of Mitchell Goldberg and Client First Strategy and not those of Next Financial Group Incorporated. Views are general in nature and not intended to be investment advice. Any discussion of individual securities should not be construed as a recommendation or solicitation by our presenters. Next Financial Group Incorporated does not provide tax advice.